this is JB Cycles with a quick update on May the 5th. So let's see what the markets have done here yesterday. Okay, let's go to the hourly data. Obviously this didn't play out as my scenario here in yellow. We had a rally here after the Fed announcement, and it triggered a new upswing indicated by my purple wavelet here. So we had a rather early low on Monday, and it didn't want to go down more ahead of the Fed, and instead we squeezed up, broke a moving average, and confirming we are in an upswing. So now I have a projection for a high around Friday, not surprisingly around the job numbers. So we have a lower low in this swing, and now we are at this resistance area. So we could get a higher high, and then we have to see if we get a higher or lower low in the next downswing. Let's jump back to here. I have the 3.5 or 7 year cycle in red, and actually it has an upside bias into May the 12th. We are in a bear market, confirmed by having a declining 200 MA. We have broken the level about 200 trading days ago, so this should be a bear market. So we should expect to break below the previous lows and make a lower low, a clear lower low. However, using bull market rules, this absolutely looks like a market low, and we should rally. But that's with bull market rules. With bear market rules, it's absolutely not as oversold as it should be before you can trust a low, which should be well above below the previous lows, down here somewhere. So do we quickly go back down and make this lower low, or do we have to make some kind of another shoulder here? I'm switching over to the 1 month cycle and harmonics of this one. So we have not reached the cycle low, so this squeeze should not be trusted. You can see I'm now focusing on this double harmonic, 2 of these cycles, and if we go back 1 and 2 of these oscillations, we see the low was not this early, and here the decline started at this point. So it can happen. This may be a short-term low, or call a medium-term low, but I would absolutely not trust it. The market doesn't have to follow this cycle, but it usually does. So I'm still looking for another swing down to test this low, perhaps, or to get a higher low, or whatever. We have to see. So I'm still looking for downside here, and as we showed in the hourly data, we have to see what happens now on Thursday, Friday. Do we see sabotage? That means going down, or do we go sideways, or what? Do we go higher? But around Friday we should be rolling over and go down, and then we'll see where we are going. I have been looking at these scenarios made up from the average of some comparable cases. You see here 56, 83, 73, so on. So I have made these channels, and they all bring the same message. They all kind of are not trusting this early low. We should maybe expect a test of this low at least, and then a weak sideways upswing before we roll over to make lower lows. So these previous rallies were still in the bull market, and they were strong. However, now, in my opinion, we are in a bear market. So I don't think we can expect follow through to the upside here and make these strong rallies. We could have some wild swings and have what I call a sabotaged longer upswing, the longer term upswing or shoulder, before we roll over and go down to lower lows. But first, maybe we have to go down and test this low, or even make a lower low. So here this scenario has a bias for going down. This one as well. We have this one measured from this low, also a general bias. Short term, the next week should go lower before we have this sabotaged upswing shoulder. And the final one that I have measured from this shoulder top, that one should perhaps be the most precise one. It's measured not that long back in time, and this one does not have a very clear bias here. It is not absolutely suggesting we should go down and test these lows. So it's all open. I have no clear bias where we are going the next weeks. I don't think we are going to crash down. I don't think we will get this huge rally and high shoulder. So chopping around most of May is my expectation. So focus on short-term trading. On these swings, they are well, this wavelet is focused on around a 6-day trading day swing, 3 days up, 3 days down. In bullish markets, the upside lasts longer and the downside is shorter. In bear markets, it's the other way around. So I think we will have a choppy day trader or swing trade market in May. Okay, see you later.